Futures are up after market indices once again hit record highs. The Nikkei rises after Bank of Japan leaves its money policy unchanged. Now it's the Fed's turn to speak. Will Big Ben keep this rally going? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are pointing towards a higher open this morning as we close at another record high yesterday. Now we have Big Ben speaking at 10 o'clock Eastern today, and the big question will be if he keeps the pace of purchase intact or if he'll hint at some sort of dial back or reduction in QE. So, Scott, do you think that Ben could shake the markets today?
I'd like him to actually do something different because the trend that we've been in is starting to get a little old. You know what, 19 for 19 Tuesdays. I know sometimes it's, you want to do a lot of the same, but a lot of the same sometimes feels as if it's going to change at some point. So people are like, 1 foot in the door, 1 foot out of the door. And recently, the trend that we've been trying to stick with got very accelerated. It started to increase, since that jobs number, and it's been making it feel as if you initiate new positions up here, at some point you can get in trouble with them. So I know even guys like myself, I've probably trimmed and trailed myself out of a lot of good core trades, and now I'm trying to just continue with the setups. But at this elevated level, even though we can go higher later this year, it's been a little tough for traders that have been trying to just be a little risk averse.
Right. Well, could you show us then a visual of the trend that we've been seeing in the market?
Yeah, so if you look here, you'll see at the chart that you have different trends that different people follow, and this one was when the new one started in November. Remember the red dog reversal, which we love, which is a trend change when you make a new low, come back above it. You saw the appetite, and then we tested it here, and since then it's been a slow trend that if you're a macro investor, you really haven't had much to think about. You're probably enjoying this rally, not even sweating it at all. As far as this trend that started when we retested the 50-day and bounced off of it and then went sideways and then went above 1597, this one's been pretty fast and furious. Okay, and a lot of stocks that were set up are now extended, and the strongest stocks in the market follow the 8-day moving average, let alone the indice like the S&P that's above it. So with that said, you look going across and you will see that we have not had a close below a prior low since. Okay, this is when we busted out. Look at this. Support held, and then we went. Support held, and then we went. So we'll see if that continues. If we finally get a close below a prior day low, then maybe let the bears growl a little bit. But at this particular point, I think Big Ben's going to really have to say something drastic, like start reducing over the summer. I think they've always said 2014, 2015, but because the market's so elevated and they don't want to cause bubbles, which I don't think we're in, I think that he might try and cool things off a bit, but we'll see.
All right. Well, that is coming up, like we said, at 10 o'clock Eastern later today. But it's all about finding setups in the market. And if we look at the retail sector, there's actually some decent setups for potential breakouts. We've talked about TJ Maxx and multiple entry points for months now. Where could potentially the next entry point be in TJ Maxx?
Yes, you've helped a lot of the viewers. You love TJ Maxx.
You have me to thank for that. Exactly. I'm keeping them in business.
Exactly. And the charts have been rewarding individuals. And lately, we have another tight pattern up here. Okay, where we went sideways for almost a month now, and then yesterday woke up, and now what traders like to do is look for attack on trades. So if you're looking for a setup above 51.83, that can continue. We talked about this many times. It's been off the charts a lot. More of a core trade was back here when it broke above prior resistance and had some authority, and now you got to take what you can get. Sideways action. Question is, can we get a trade here? That's your level in TJ Maxx.
And similarly, at least in terms of the type of store, ROST stores has been consolidating at highs for over a month, and it did have a nice move into resistance yesterday, so now we have to see if it can break above it.
Yeah, like we went over this, I think, a few weeks back, and I was trying to be involved and it wasn't ready. So just because something wasn't ready when you wanted it to be doesn't mean it can't happen now. So put some of those past memories behind you, and overall, this pattern looks good. Look at ROST stores. This was that big gap up, pulled in, held the majority of it. So we talk about how that is bullish. Went higher, now it's been going sideways. Nice sideways channel. You want to take a little bit of a closer look, and you will see here it is. Okay, yesterday you had a nice day, closing near the highs. The question is, can it break above resistance? It let the 8 and 21 day catch up, which is what you want. after a nice move. So above this area, above 66.60, it can give you another move, and then at some point, market stays in there. There's no reason why this can't get back to the old highs of about 70. So right here, this is your tradable pivot.
And then one of the laggards, JCPenney, was able to reclaim the 100-day a little over a week ago, and it started to act a bit better. Do you see a setup here?
Yeah, this is one of those, treasures for trash trade. If you've held it for a while, ever since the news about the Apple executive, whatnot, you have to know what you're looking to get into and get out of a situation. And this one is one of those where all the big dogs are fighting over it. Some are short, some are long. You look at where it came from 40 all the way down here. Recently, it did have a breakout above this trend, went sideways, went above it again, and there is something here, okay? If this were to get above 1935, I think you can get another squeeze, and then we'll see what happens at the 200-day. But the 200-day has been resistance for a long time with JCPenney. This is a broken stock, a laggard trade. But, in this phase of the market, we're looking for anything where it's at least calculated. So above this area, perhaps you get some cash flow.
And from department stores to dollar stores, Dollar General has been climbing higher above its 21-day for some time now and has cleared resistance levels on the way up. Is there still a lot of room to the upside here?
This one's not as set up. It's just working its way back to the last year's highs. And if you look here at the setup here, it's not that tight. This was the last time it broke above a descending channel. Here's where it tested it, and now it's just trending higher above the 8 and 21 day. If you look here, this was the prior high, which was about 55.56, where it's approaching. So I would think if you're long this, stay with it. As far as like an active trade, I don't see it, but overall the trend here is somewhat strong, and you could stay long it if you're long it versus the 8-day.
All right, there's still spots out there. So coming up, we're going to go outside of retail and go in the trenches with some potential setups in other groups. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some potential setups out there, starting with pharmaceuticals. Jazz Pharmaceuticals got a push after a few days of consolidating above its 8-day and is now approaching a resistance level. So would you say that Jazz Pharmaceuticals can get through that?
I hope so. I'm actually long a little bit. Not that I'm a fan of the company, but I'm a fan of the setup. And right now I'm just looking for setups, and I'm doing it in a way that makes me comfortable. If you look here at the chart, you will see that here was your high back in October. It couldn't get through it again, and then it tried here, and then now it's held higher and it's trying to bust through. So if you look, that level right now is around 60.20. Actually, yesterday's high is 60.50. Right here you have 60. 90, what is this, or 60.80. So I would say, above yesterday's high today, you could look for some more action. I am long some, and maybe I'll add if I see the volume come in early for what could be a clean breakout above, key resistance, but I'd like to see more volume than we saw yesterday.
And Tesla is still taking a break after its monster move. What are the key levels you would say it needs to hold to keep some kind of momentum intact? Well,
we can now use yesterday's low as a new point of reference. After a monster move, you never know how long it's going to rest. So yesterday it broke below a micro level, but then held the 8-day. You look at the chart here, I would say that guys are focusing on this. You've had a huge move, okay? So what you have now, 1, 2, 3, 4, 5 down days, but very controlled. So we did hold the 8-day. Here is your upper flag type pattern. I'm not sure how many more days we need, but some are trading versus yesterday's low, which is about 85.28. If it starts getting above 90, that's when it starts to get interesting. That's when maybe shorts get ready to start covering, and then you have these price points that it'll have to get above. So at this point, here is support. Let's see if it goes a little bit more sideways before it, it looks to go higher. It's on all of our radar, and I think for me, I'd like to see it go negative to positive and then above 90-ish. And if it holds there for a little bit, with volume, I'll get involved there too.
All right, well, checking in on tech, the space remains somewhat mixed, but we have Amazon digesting recent gains and holding higher. What are the key levels to watch here?
This one's a little bit more interesting because it has a macro pattern. Plus, it's a leader / former leader. The only reason why it's a former leader is because for the past 2 quarters, it's been consolidating while you've seen some other names make historic highs or 2013 highs. So for me, this is something, I don't know if it's going to have to wait till earnings, but this is something that we might be able to sink our teeth into. I know that a lot of people are bewildered by the PE and how it doesn't go lower, but the bottom line is it came to the 200-day. Couldn't stay below there for more than a few sessions, came back up, it's holding higher. So for me, if it can get above this 272 to 275 with some volume and holds above it, I'm not long now. Maybe I'll look to get long, and then perhaps you see a move to take out these highs because traders and funds and mutual funds, they need stuff to do. This is a behemoth in its group. And overall, the trend has been really strong, and it's not that often that you get a nice descending channel with points of reference along the way to use as a springboard.
Now let's talk Apple, which was able to pick up some buyers after Tim Cook's congressional hearing yesterday. How do you think overall the street handled it?
I think everyone was a little scared. They didn't know how he would react on the Hill, and I think he was calm. He was cool. He said everything the right way. They hire people. They pay their taxes. They do have some sophisticated tax structures like every person in America or a lot of people do if they make a lot of money. And one of the questions was like, do you think you have an upper hand on smaller businesses because you could set up entities out there? And it's Apple. You think how much money they make, how much money they make in taxes. You can't even compare. But anyway, the bottom line is they didn't do anything illegal. So hopefully now this is behind us. I think psychologically maybe it was a positive for the street with Apple because they see that he can handle himself. They see that he's looking for growth. He's an American company. He's hiring. But the question is, can the stock act better? And yesterday it went down like $7-8 in the beginning, regrouped. The pattern that I'm looking at is still intact, but it needs a little bit of time. We'll see if it can get better today. You look at the chart, you will see, ever since 700, it's been a big time move to the downside. Now the question is, do we have a bottoming formation here? Which it looks like we might. This is your left shoulder, this is your head, this is your right shoulder. That is what we call an inverted head and shoulders pattern. Remember this last trade when it went above 420, gave us a really nice move to resistance, came in, retested, held, and now the longer it stays above, just say this 435, the higher the probability we can get an additional trade if it can get above and close above this 446. I am long some Apple. If it shows relative strength today and some volume, I will be adding right around here. Then your next real resistance comes in around 460. But if it goes red and does what Apple has done and failed a lot of this point, I think you have to be very flexible and treat it as a trade.
All right, let's get in one last tech name. Intel hovering around its 8-day after a 2-day down move. So at what level do you think it could get back in motion?
Well, let's just quickly go to the chart. This one, with a lot of mega cap names, even like Microsoft, has had a nice move. Now it's just getting tight. So with tight patterns, I'm looking to see if there's any kind of opportunity. So really above this level here, perhaps it can go again if the market wants to continue. 24.25 is that level.
Okay, time for some quick hits here. Let's talk Yelp, which has tried to push into resistance at 32.88 a few times, but failed. What do you think? Will it have enough power to get through?
Just remember 32.80, a move and close above 32.80, and this one can extend.
All right, and Fastenal back in motion after finding support at its 8-day. Where could it pick up more momentum to get back to highs?
Well, let's look at this chart. This one, had an igniting bar right here, okay, which it wound up engulfing this entire range. I can't grab my little trusty pencil. Here it was, descending channel. We always love those because it could ignite a move, and then what did it do? It held higher, and now it's flagging again. So I think above this 52 area, you could see a move back to at least test these highs here, which comes in a little under 54.
And now ZNGA. Scott's talked a lot about the cup and handle pattern in ZNGA, and the stock actually broke out of the handle a little over a week ago. What do you make of it now?
It's just, it feels like I see volume flows come in, and then it comes in, they buy it up, and then they're done with their order, and then it trickles lower. At some point, it feels like this could get going and see 4+ until it really gets above 360, 365. I think, staying at tier 1, and then maybe it goes in motion. You look here at the chart, this is truly a trash for treasures trade. It's gotten so battered and bruised. Here is this area here. I think it really needs to clear this with some force in order to test a 200-day and fill this gap. You do have, this is very unstructured. You have this long cup here. Okay, and this could potentially be your handle, but usually this happens from upper levels, not lower levels. But with that being said, a few funds have been accumulating. This thing was as high as 14 to 16. It does look decent. You've seen some nice action in something like Groupon, which also has been battered and bruised and trying to work its way higher. So just something to do. I wouldn't be trading ZNGA, but if you're holding 6 to 15 positions or something like that, maybe just own it. And if you do see it finally hold, you add to it.
All right, and finally, let's talk Microsoft, which did take a break yesterday after 6 up days in a row. What's the key level it needs to hold?
Microsoft's funny because yesterday in the mornings, it was upgraded, or at least the price target was upgraded. And I was just like, it's funny, these wirehouses. Goldman Sachs downgraded it at 29 to 30. Okay, and that's when we were getting bullish on it. We're like, everyone wants yield, mega cap, blah, blah, blah. We showed the macro pattern. And then yesterday at 35, 6 points higher, nice percentage higher, then they start raising the targets. And then, if you bought that up move, it wound up closing and you're below that cost. So all in all, this was the pull-in that we actually mentioned, that could be buyable right on this red dog reversal. From there, beeline move, red day yesterday. Now I would say wait for Microsoft. You could probably buy it closer to 34. You look at your weekly chart of Microsoft and you'll see the only reason why I thought perhaps it can get going again is this channel. You know how I love channels. Channels are consolidations, and you look at different areas of this channel. Here is the target that I put for the year, which was right around 37-ish. This was the breakout above this symmetrical triangle right here, which is one of the reasons why I said it can go. And and there it is. So with that said, there is still room here. They have a big advertising campaign. Windows. It looks like people need to park money, and this now is a little bit more controlled and more glass half full than glass half empty.
All right, so give us your closing thoughts then as we approach Big Ben speaking at 10 o'clock. Should we be bracing for choppy action today?
Well, I just think we need to brace for something. There's going to be some erratic moves, like usually on Fed day, 2 o'clock, you have a lot of false moves, so don't fall for it. If you like your position, stick with them. I would be a bit careful just in case there is a surprise by that gentleman right there. Whereas if he does come out and say that they're looking to taper early, maybe start this summer, you could see a sell-off. So, we talked about yesterday's low in the S&P and the spiders. If we could finally get and stay below that for more than 15 minutes, maybe, we can get some type of corrective activity. I know yesterday, it seems like every day we pull in around 10:30. And what I've been doing is instead of covering my hedge and buying more longs, I've been pressing that hedge thinking we might get that pullback, and then we rally and I lose money in my hedge and I didn't buy enough longs. And that's been like a frustrating little dynamic that a lot of traders, including myself, have had, especially in these extended levels. So with that said, important is know your time frame, and if it's shorter term, keep it shorter term. There's still a lot of setups out there. Things get tight and go. And then also if you are bullish and you've been all in, don't fall asleep behind the wheel, because at some point risk does happen fast. And you don't want to think that, okay, we're going to go higher later this year, and then if we do get this 3 to 5% pullback that might happen, you wind up not being able to hold through it because you thought your risk tolerance was different.
All right, happy trading, everybody. Have a great Wednesday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.